Okay, guys, the man, the myth, the legend, Dan Gjeldum of Guaranteed Rate is here with us. He is the Senior Vice President of Mortgage Lending for Guaranteed Rate. Okay, so we're going to go big right off the bat. We've got a lot of really great things to talk about, but we are at the beginning of the year. We know that 2023 was a year that, in my opinion, was defined by interest rates and inventory. Those two things really challenged us in so many different ways. So with that being said, with that behind us, thankfully, what can we expect in 2024 in the mortgage realm? And I know asking that's a big, big question.
Yeah, and mortgage rates are always really difficult to predict because they're impacted by so many different things. But the overall market kind of sentiment is rates are going to be lower, right? I mean, they're down a good % from their highs. And we're anticipating, rate moves aren't always down. Right? They're not always down. They're not always up. There's going to be some spikes here and there. But we anticipate mortgage rates to be in the 5s to upper 6s throughout the year.
That would be amazing. Just to not to look too much to the past, what was the highest rate that you locked in last year?
The highest rate was over 8%.
For certain. No, it was definitely a rough ride. So obviously there's a lot to digest and unpack on this topic. What are the main things that we think are going to be driving rates? Why do we have so much confidence that they're actually going to get lower this year?
Yeah, we've the biggest driver of mortgage rates is the inflation data that's out there. And we've seen inflation data come down a bunch. And inflation's always year over year, right? So it's always a 12-month moving average. So we're seeing inflation come down, which is going to lower that average inflation, which is what the Fed determines their rate cuts off of. So I think with the way that they've been moving here recently at the end of 2023 and the start of 2024, we're on a good path. We just can't, that dreaded surprise could pop up and they could not, they might not go down as quickly as they're anticipated.
And from your expectation, when we see these rates go down, what happens to your phone?
Great question. It really picks up for all the people that we financed in 2023, right? They're all ready to refi because they want to get out of those higher rates. But the people come up, they start, jumping off the fence. They start to, get their heads around, they know that rates aren't going to go down to the 3s and 4s, right? But they're more comfortable once those rates start to hit. They start with a 6.
And I'm sure you're already starting to feel a little bit of that as we've seen these positive improvements in the rates.
Yeah, for sure. Yesterday I had 6 client calls, that's what it was a couple years ago or more than that. But the fact that we're in the spring here or the start of the spring market.
Doesn't feel like spring out there, people, but we consider it spring.
But we're starting to see those calls are happening. The people are, I'm looking right now. I'm looking 6 months. I'm looking, in the fall. So it's picking up big time.
Yeah, and I agree. It's so much of what we preached last year, right? We had so many clients that were so hesitant to do things because of those darn interest rates, right? They were ugly. And we said, hey, just as a heads up, what was the saying? You date the rate, you marry the property,
yep,
right?
Exactly.
The rate can be changed. And with that in mind, we had a lot of people that were moving forward on their purchase, knowing just what you said. As those rates come down, we absolutely expect the amount of people that are sitting on those fence posts waiting for properties to feel more affordable to go up, which will make our market more competitive.
Yep, for sure. Yeah.
So,
people that bought last year are going to see appreciation. So when they go to refi, they're going to have more equity in their house than they did when they purchased. And Unfortunately, the people that continue to wait to jump off that fence, the prices aren't going down.
No.
They're only going to be going up, which, a little bit, it's always one. I had the conversation on the way here today. Someone who is waiting for rates to go down 1/4 point, if a property value goes up 2%,
cost them more.
Yeah, it's a mistake. So
yeah, no, it's a hard thing to explain to people in the thick of it for certain. It's something that we've been preaching a lot, obviously, to try and make sure that our clients are as educated as possible. But it's sure going to set up for a bit of a wild ride. Okay, we try and stay away from a lot of politics on this show, right? Our opinions don't really matter in the grand scope of things. That being said, it's an election year. And I know myself, this is my 6th election year. That would probably make it your 7th.
I don't know. I'm old.
It's a lot. Anyways, what is the impact that the election and the lead up to it could bring to your industry?
Yeah, so typically election years bring lower interest rates. Like historically, that's kind of how it works. Now, if there are surprises, and I'll never forget this, in 2016, myself and colleagues were on one of our trips that we take as a company when the 2016 election happened. And that was completely unexpected to people. And interest rates, like the markets, completely crashed the next day. And while we were sitting on a boat, we watched interest rates go up almost, I think it was almost 0.75%.
So you had a couple more drinks that day.
Yes, we did. But in overall, the election years do, I think you can kind of lead into that rates will be lower as we look through the year, especially with all the, inflation data that's also supposed to come out. So it's kind of the perfect mix. It's just where they settle.
Yeah, no, as I always kind of like to say, is not nearly as eloquent as that, is just that on election years, and you're right, historically, we tend to see the lead up to the election, a lot of downward negative pressure on the interest rates, which is great, which is part of the predictions we were making last year, but that it's that nobody wants anybody to be offended by something that's affecting them personally. And so we see that there is a lot of consideration so that whatever drives voters, and like I said, most voting is done for more selfish reasons, that's not going to offend them. And they like to see those lower interest rates for certain. So, and that's been so much of the advice and counsel that we've been giving over the last 12 months is as we were locking people in at 7.5%, 7.75%, and 8%, understand that the likelihood that we have a better horizon in front of us and that you're refinancing in 12 to 24 months is very, very high.
Yeah.